So here I am on COMEX's webpage, and I'm going to discuss how the Shanghai Gold Exchange, the newly created Shanghai Gold Exchange, could collapse the dollar. Now, the dollar is very sensitive to a number of things. The thing that it's probably most sensitive to is the price of gold. And this is why there has been all this price manipulation in gold. And the way it's been done is through these COMEX futures contracts. Because the rules of the COMEX exchange mean that you do not have to have the gold that you are selling. If you are a bullion bank, and there are quite a few bullion banks, then you are allowed to sell gold which you don't even own. And the reason they let this happen is that they know that most of the people on COMEX are going to be traders, they're going to be people who are speculating, and so they're actually not interested in the delivery of the gold. Well, this is the theory anyway. And for this reason, it's known that there is a massive markup between the gold that is actually being traded via these paper certificates and the gold that actually exists. Now, the lowest quote for that is 100 to 1. The highest I've heard someone say that the figure is, and that I've seen it, that someone who knows what they're doing say that the figure is 400 to 1. So can you imagine that? You think that you own 400 ounces of gold, you don't, you owe 1 ounce. If you were to ask for it back, what happens? So okay, the US dollar is actually very sensitive to gold. Now why do we say that? Well, the Fed has said an awful lot of times that gold is not money, and they like to compare themselves with this US dollar index, which is an artificial thing that is basically a basket of currencies that has weights to each currency, and here is the definition on Wikipedia. I say this is the current definition because these weights get adjusted all the time. They get fiddled to make the dollar look better. So they love to measure the dollar against this basket of Western currencies. Apart from the Japanese yen, but it only has 13.6% weight. And if you look, they're all the currencies that actually aren't doing all that well. Okay. So the euro especially is very, very weak at the moment, and that accounts for more than half of the actual dollar index. So they love this, but Forex traders don't like it. So what do Forex traders do? And people who generally trade in government treasuries, things like a US 10-year treasury bond, they like to compare with the price of gold. Let's have a quick look. We've got goldprice.com, current price of gold. Gosh, it's gone up again. It's gone up quite a lot today, actually, $8. 1247, and they love to compare it, and these figures come off COMEX. Okay, so the US government prints $1 billion via the Fed. They then give it to the bullion banks. The bullion banks issue certificates for gold, and the certificates are backed not with gold but by the dollars that they've been given. And then these certificates are dumped on the market at a time when there's nobody awake, So of course nobody really wants to buy them, the price of gold drops, and that's how the market is manipulated. Now why do I say the Shanghai Gold Exchange could sink the US dollar? Well, here's the website of the Shanghai Gold Exchange. It's the English website. Hang on, I'll just drop this down so you can see here we go. That is the web address. Chinese, obviously, .cn. And obviously they'd like you to open an account, they'd like you to be an investor, they'd like you to be a member, blah blah blah. And they've got all these new products coming along. But the most outstanding thing about the Shanghai Gold Exchange is that it cannot be manipulated, because you have to have the gold that you are selling. You cannot just produce a piece of paper that's backed with some currency or other and say that this is the equivalent to 400 ounces of gold or whatever. They won't let you do it. You've got to have the 400 ounces of physical gold. And already on the Shanghai Gold Exchange, you can go and have a look at the prices. Prices here where it says data. You've got delayed quotes, you've got benchmark prices, you've got prices daily, and here's the prices. Of course they're all in yuan, and you can go and work it out, but at the moment there's already a difference between the price on the Shanghai Gold Exchange and on COMEX. Gold is more expensive on the Shanghai Gold Exchange. Why is that? Because gold is in short supply, and you can't print gold like you can money. So the Shanghai Gold Exchange cannot be fiddled. Now, the thing is that if you were a trader, would you rather not trade in an honest market, which might actually be predictable, rather than in a market that someone can crash on a whim? So the feeling is that an awful lot of people who are currently using COMEX will migrate onto the Shanghai Gold Exchange, and they will become investors. And they will use the Shanghai Gold Exchange to buy their gold, and it will be real gold and not bits of paper. And if this happens, the price of gold, because it is very scarce, because basically China's bought nearly all of it, the Indians have bought the rest, and whatever's left the Russians have hoovered up. So, not to mention Brazil. So the price of gold, as soon as people start moving over to this new exchange, is going to soar. It will then become very obvious to everyone that the dollar is not worth what they thought it was, and incidentally that all the countries in that Wikipedia basket that I showed you, this dollar index, all of those currencies aren't worth what people think they are worth, and then you're looking at currency collapse of Western fiat currencies big time. Well, I hope you found this useful and interesting, and if you do, then please like, subscribe and share. Thank you very much.